all the different types of accounts. There are a lot. Um, they all have pros and cons. So make sure that you are opening the account that's really going to allow your money to work for you the way that you want it to. What's up, everybody? Welcome back to YBI, where we discuss opinions and strategies on how to better your financial selves. Zion Roman here. How you doing, my guy?
Doing pretty good. How you doing?
Living the dream. So today we are back to talk to you guys about accounts. All the different types of accounts, what the pros and cons are, but really just to discuss because we've been talking about so many different types of accounts, we just felt like it was necessary to touch and describe all of the different types of accounts for you guys. So let's just hop right in because I feel like we've touched a couple of these. So there's a few new ones. So we're gonna try to cruise through some of the ones that we've hit before, tell you where you can find a little bit more information about them. But then we'll hit the ones that we really haven't talked about too much. So where you want to start?
I guess what to use an account for? I guess any type of bank account is used to store value of some sort in some type of way, and whether it's through like storing it or holding it for savings reasons or using it just for checking and other ways. So if you touch back about what is currency and different forms of currency and commodities and things like that and securities, we'll link that video down below. But these would be some different accounts you basically can hold some of those different assets and use them and actually spend them in different type of ways besides just walking around with a bag of gold coins or with cash. But yeah, I guess we can start off hopping right in with savings accounts. Like those like the easiest ones.
Savings. Yeah, savings account. So savings account, we've obviously touched on several times. It is separate from your checking account, which we'll get into in just a second. But the savings account is designated for money that you are not trying to spend immediately. This is money that you want to have compounded interest on. This is money that you have specifically set aside that is outside of your emergency fund. So your emergency fund, you typically want to have in an account that is not necessarily a savings account because in a savings account, if you start to transfer a certain amount of money or too many transactions within a certain period of time, they will actually start to charge you for it. So we don't want that. We don't want you to have any deductions from your standard savings account. So it's separate from your emergency fund. My PNC account has 3 different accounts linked into one. So there's a specific savings account, there's a specific spending account, and then there's one right in the middle called like the overflow or something. So if I happen to go over how much I spend in my checkings account, it's the reserve. It will go into the reserve account and it will pull the money so I don't get hit with an overdraft fee. But that does not happen with my standard savings account.
That's a really cool kind of feature that PNC has with that. I guess I guess especially if you have a savings. I know a lot of banks. That's a good benefit of having a savings account that's linked to your checking account is that you can kind of have like different ways like that where if you do overdraft or whatever, it'll pull from your savings account so you don't get hit with those fees. I love how you brought up your emergency funds should not be in your standard savings account. It should actually your emergency fund like your $1,000 like quick one should either probably be very quick in cash like a safe in your nightstand or whatever, or even in a different account that we're going to bring up later on in the video that not going to touch on too much now. But it's also really good as a good account just for teens or for kids or even college students that don't know too much about money yet, just because it's a money that you can't directly pull from unless it's linked to a checkings account. It's money that goes there, it's sent, and it earns some interest and you don't touch it.
Mm-hmm.
That also
Absolutely.
could be a drawback because you can't get to it as quickly if you do want to pull from it real quick, unless it's linked to a checking account. Then you can very easily just move it over and use your debit card at an ATM and pull out cash.
Easy money. So I think that goes right into what a checkings account is. You wanna take the lead on that one?
Yep. So checking accounts are just used for everyday spending. As we maybe some of you may remember, some of you may not, how you would see your parents or even grandparents or whoever balance in their checkbook each month, and they would look at the checks they actually wrote out checks and see where they sent checks out to and the check numbers for mortgages or rent and bills and all that. And that was your checking account. It was used for everyday purchases, for bills and things like that. Now, of course, as technology and time and stuff has evolved, now we all pretty much use a debit card and we use online bill pay, which is, if you've never actually seen what happens with online bill pay, the bank still kind of mails a check out. You just doesn't look like a check to you because you're just typing in numbers on your computer. But it's essentially the same thing. Your checking account is still sending out checks to pay for different things. A debit card is pretty much just a quick check when you swipe it. It's just basically writing a quick check to whatever transactional institution you're going to. Um, so it's good when it's linked to your savings account because you can very easily transfer. Checking accounts are your main way to transfer money between any of your accounts, whether it's to a brokerage account, a money market CD. More than likely, you're pulling it from your main checking account first. It's your main source of spending. And depending on how people do, some people will, like your direct deposit for your bank, some people will send it directly to their savings or send it to their checking and then send a portion to their savings. Most times, you'll see a checking. Drawback, I would
Uh,
say, there's no interest rate. You get no interest rate on checking accounts. Unlike savings accounts, you at least will earn something. I think the national APY is like 0.01 or even less than that for the average APY on a checking account. So definitely meant for short term, like money use. Like I keep enough money in my checking account just for monthly balances. Everything else goes into like savings accounts and different things so they actually can earn more money and work for me.
Yeah. So I think that that segues us into the money market account, which is pretty much a mix between your checkings and your savings account. So these accounts are for people who, one, have a lot of money. And not a lot of money, but you have to have at least 2,500 to like $25,000 to open one of these accounts. These yield a lot higher interest than a regular checkings account or a savings account because it's a mix of the two. So with this account, you're going to end up getting a credit card or a debit card and checks, but at the same time, you're going to have the restrictions of a savings account. So you're not going to be able to transfer money through that account as much. You have like six times that you can transfer money or six things that you can actually use that account for. So that one is used more as a savings account, but you also have to know that you have to have a certain amount, a certain limit in there every day. So this isn't like, oh, at the end of the month, you have to have, 15,000. No, this is at the end of the day. You still need to have $15,000 in there. So the money market accounts are good in terms of, hey, I can get more money because the interest is so much higher, but at the same time, it's going to restrict how often you're going to be able to use that account and how much you have to have in there to make sure that you can keep that account open.
So something you can really use it for, your main nest egg, like your 3 to 6 month emergency fund or your 6 to 12 months, whatever you set it for.
Yeah.
It's a good place to hold it because you're probably not going to touch that money for a while, but you will have checks and access to it more quickly than maybe a traditional savings account. To where, let's say, I don't know, maybe your checking account got hacked and you lost all your money in there. Now, at least you have your emergency fund and your money market account where you can pay bills really quickly from there. And once that gets resolved, you can, refill that back to where it was. That's a good way to really do with them. What's another way you could pretty much use a money market in a sense like that you could think
I
of,
mean,
Zion?
well, I think that based off of what you said, yeah, it's excellent to have that as the emergency fund, but at the same time, you have to make sure that you are above whatever that minimum threshold is.
Mm.
So that's what your real emergency fund is. So if you're saying, hey, I want my emergency fund to be $2,500, but the minimum that you have to open that account is 2,500, that means that you need to have at least 5,000 in that account because 2,500 has to stay in that account in order for you to not get hit with fees, in order to make sure that you're getting that interest rate that you need. So just making sure that you have the minimum plus whatever your emergency fund is in that account, so you still have access to your emergency fund without the negatives that come with pulling out money from your money market account.
I've also seen people use money markets for specific savings, like if it's for college or for buying a home or something big like that. You can hold money in there and still make transfers into it, but you're probably going to keep a higher opening balance because it's a bigger purchase, and your plan is to use that money only for that specific big purchase, and that's pretty much it. So
Mhm.
ways like that are really cool to use a money market account in that sense for it.
Yes, sir. So, moving on to investment accounts. We've talked about
Brokerage
investment accounts.
accounts. Yeah.
I saw you, boy.
All the brokerage accounts. So brokerage accounts are just accounts where you have a normal, in the olden days, I keep references though, but you have a broker that you would call, or they would send things and they would make a trade or transaction for you. Nowadays, a brokerage account can just be from your phone on like Robinhood, Webull, things like that, and you basically will buy and sell securities from it. There are many different ones. We've touched on them. Some have fees, some do not, but basically, it's where you're going to be doing all your investing from. Most times you can't hold cash in there. Sometimes those brokerage accounts will pay you an interest rate on just holding buying power cash in them. And then you use that money to buy your trades and your securities from. Downside from it, usually it takes a little bit longer to transfer funds from your brokerage account back to your savings account or checking account, especially you have to sell a security because you have to wait for that transaction to go through and then wait for the transfer to go back to your account. Sometimes it's like rapid transfer, but then you got to pay a fee for it. So you want to make sure you kind of read your brokerage fees and know what you're talking about when you go into that situation. There are many different ones. I would definitely say either consult with a financial advisor or for any of these accounts to open, of course, and to do your own research and see which one kind of best fits your situation. But it's really preference when it comes to brokerage accounts. And
Absolutely.
I would say maybe investment style because some are better for certain investment styles.
Cool, cool, cool. So, moving right along because we've talked about investment accounts. So there's, I don't know, plenty of videos that we can link in the description below to give you guys more information on investment accounts. And similar to what we're just very briefly going to touch on retirement accounts, because we did retire in luxury, so you can check that out. Um, but in individual retirement accounts, so this is the IRA accounts, this is your 401k accounts, these are those type of accounts that you are not readily trying to pull money from. This is specifically for your retirement. So when it comes to, retirement and working somewhere, you can set up one of these types of accounts, and money will automatically be deducted from your check and will go into a specific account for your retirement. So it'll actually tell you, oh, this is how much you're pulling from each check percentage wise, and this is how much you're going to have at the end of your time working. So in 30, 40 years, if you pull out this much every year, you're going to have $14 million, or you're going to have $60,000, which will allow you to address how much you want to change and all that good stuff. There are obviously negatives to pulling from those type of accounts. You can get with you can get hit with interest if you pull from those, or taxes at the end of the year. So if you pull from those accounts without the designation to actually pay that money back in a certain time frame, yes, you will get taxed on that money. So if you pull out $4,000 from your retirement account, they'll be like, oh yeah, you owe us, 3,000, 4,000, or $400, whatever it is. Um, in addition to, if you pull that money out, obviously you're not going to have it for your retirement, which is what it's designated for. So that is that is the
If we
whole
want to be
move.
point blank and real, if you pull money out of your retirement account, you will not have any money to retire off of.
Yeah. So that's kind of salty. So yeah, retirement accounts. We'll link another video in the description below just so you guys can look more into what retirement accounts are actually for.
Yeah, probably
So
401k pre-tax, Roth IRA post-tax. Go in there with it.
yeah, get one, get something, especially for retirement. It's necessary. We've talked about the Social Security situation and how our generation may not have that. So we need to do other things to be prepared for retirement, so we can retire in luxury, like we pretty much said in that video. Um, CDs on you.
CDs. So we just did a video kind of talking about how CDs can be a CD ladders can be a great kind of long-term investment play. CDs are savings accounts that hold your money for a fixed term with a fixed interest rate for that term. It can usually be anywhere from like 3 months to 5 years, and it has a maturity date. Once the maturity date hits, that money gets released. Usually, it goes back to a set checking account or a set savings account that you already had set when you first set up the CD. Of course, if something changes during that time, you can change that. Just contact the bank and let them know what's going on. Of course, it's really good because you get a higher interest rate and it's set and it's fixed. Of course, the drawback is if you try to pull out your money early, depending on the CD, if it's a no penalty one, you won't have any penalties. Of course, if it's a penalty one, you might have to pay a penalty. So just look at that before you go into it. I kind of compare these to kind of like I kind of use CDs like just like a money market, but in the sense that CDs usually have a lower minimum to start with. Some CDs can start off with as low as 500, which most money markets have at least 2,500. So you can start off at a lot lower of an entry, and you can still get a lot of the same benefits, except for the pulling out your money kind of more liquidable. So you kind of use it like that. We did a whole video about CD ladders, so I won't bring up that too much. But CDs are great. I advocate for them a lot, especially once you get your savings going. It's a good way to kind of keep the ball rolling for you, and it makes it a good way for you not to be able to touch your money like at all. You sit there, it works for you. Don't touch it.
Yes, sir. Last one, credit union accounts. I think this is the one that we haven't really touched on too much on this channel, but we've gotten questions about the perks of credit unions, what they really are. So, a credit union is pretty much a nonprofit organization that allows members to come in and create accounts. So, when you see commercials like USAA, or if you live in the Chicagoland area, Ileana is another big one that's around here. But pretty much anywhere you go, you can find a credit union. So a credit union is, hey, I'm gonna open up this non for profit organization, and I'm only gonna let in a certain people. So there are membership applications. There may be fees that come with those applications, but it's just like, hey, you have to be between the age of 14 and 35, and those are the only people that we are going to allow into our credit union,
Yeah.
because we only have a certain type of account that we're going to allow. Or you have to be a veteran, or you have to be part of the nurses association, or you have to be something.
Yeah, I've seen some that will be like you have to make a contribution to some charitable organization of some sort or a list of the ones that they offer. And once you make a contribution, you can open up an account. Some will just be based off where you live, things like that.
Yeah. So those accounts are good in terms of they typically have better interest rates than random places because you had to do something in order to get there. So they're like, hey, this person is working some type of way in some type of capacity to help our organization. So we're going to give back to them by getting better rates, giving higher interest rates on savings and checking accounts, possibly. But it's all in doing your research for which place is going to be best for you. So if you happen to qualify for a bunch of credit unions, you should probably shop around to see who has the best interest rates, who has the best interest rates in terms of how much you're going to be able to save, and how much you're going to end up spending on house loans, on car loans, on
Or
all these different things.
credit
So
cards. They usually
yeah,
give you very good interest rates or even higher limits on all those things from what was I just said from auto, car, anything really doing a credit or debt, they'll usually give you a better interest rate or offer on because you're part of the clan.
yeah, the clan. So what's good with these again is that there really isn't a certain amount. There isn't a high amount that you need to start one of those accounts. It's typically like $5 to $25 just to get one of those accounts open. So it's not super high, which is fantastic. Which means that you can just go in and be like, hey, I just want to pay my application fee, which may be $30, whatever it is. They get all of your information submitted. You open an account with $5, $25, whatever it is, and then you're rolling with them. And at the same time, they have um, more insurance in theory than regular banks. So if they happen to go bankrupt or something, more of your money is supposed to be insured. Again, that's something that can vary from credit union to credit union. So it's a matter of going in, talking to somebody, calling them, making sure that they're reputable, and seeing if they're nationwide. Because one of the negatives that can come with having a credit union is that you can't necessarily
Forgot about
use
that.
every ATM. You can't just go to an ATM, because if you have Chase is all over the country and all over the world. You can always find a Chase ATM, but you may not be able to find a credit union ATM. In doing HR and payroll, um, another negative, potential negative that can come from a credit union is that those accounts typically aren't open on holidays. So I know that just a few months ago, we got paid on like Christmas Day or whatever it was. We got paid on some holiday. Some of our employees that had credit unions were not able to get paid because whoever was supposed to be doing stuff for them was off. So having a larger account or one of these bigger branches behind your bank account allows for you to have those perks. But at the same time, they have credit unions that are like, oh yeah, we deposit 2 days early or whatever it is. So it's a check and balance kind of situation, just to make sure that they have exactly what it is that you're looking for. Um, I personally wouldn't say just have a credit union. I would say have a regular bank account, but then also have a credit union that I would probably use as a savings account, just because they have higher interest. So you put more money in there, higher interest rate, you're going to get more back at the end of the day. But then I would also have something that is a national backing behind it. So I have the perks of being able to go to any ATM, withdraw money from anywhere without fees and such.
Yep. There's actually kind of one more account that I was kind of just thinking about that kind of ties in one of the other ones that we did for brokerage accounts, but just because in the recent times it's kind of gotten more popular, would be a brokerage account in the form of crypto, of buying cryptocurrency, which you can do for most brokerages. They'll have like a tab for crypto, but what most people kind of think of, even though that money can sit in a brokerage account, kind of, you may not necessarily own the actual currency itself in that. A wallet, actual like a cryptocurrency cold storage wallet is what you actually would need to actually store it. And I've showed those before on the channel. You can pick one up. They kind of like USB sticks with your private keys, and you can move your accounts over to there. That's something definitely, if you are getting into the space of crypto, you want to look at and kind of know how to store your money and your private keys, because without that, you technically don't own your own money and your own asset, and it could be lost to you at any point in time. Just a little pro tip I forgot to mention earlier.
Yeah. Last thing that we kind of want to touch is what you need to open an account. Typically, you're going to need all the same stuff. So, driver's license, bring a copy of your social or passports just in case, and then bring 2 pieces of mail with your current location, your home address. Both of those things are going to be helpful. You may not need all of that, but having a driver's license that obviously has your address on it, or state ID for you younger people that don't necessarily have a driver's license, bring your state ID, passport or social security number, or social security card, I might say, and then 2 pieces of mail that can identify and corroborate where it is that you live, and then get it done.
Yeah,
Get
most
it
times
up.
you can open these accounts online, and if they need
Yeah.
more documentation, like they'll ask for it, you could go into a location, but a lot of these you can't. Credit unions, you might have to go in there more often than not, but for most of these other ones, you can just do online. You have to be at least 18 for open up most of these accounts. If you are under the age of 18, your parent or guardian can open one in your name, and they still have access to kind of help you with you and guide it. If you are a young person get into the space, I'm pretty sure your parents would love to kind of help you start learning how to use your money and get into that. So they probably shouldn't have a problem doing that. Or I'm sure just wait your time. Your time will come.
Yeah, keep putting your money under your pillow. It'll multiply at some point. Um, I think that is going to wrap it up for us today. All the different types of accounts, there are a lot. Um, they all have pros and cons. So make sure that you are opening the account that's really going to allow your money to work for you the way that you want it to. If it's just, hey, I need to have money right now, then that's a checking account. If I have a little bit of time and I want my money to kind of compound as much as I
Just
want
smash
it,
the like button.
that would probably be the best thing to do. And then, use a money market account or use a different type of savings account or a credit union. And then if you're like, hey, you know what, I've got a little bit of extra money and I'm looking to just invest, that would be a crypto account, or it would be a whatchamacallit account.
Brokerage account.
That's the one that I forgot. And then if you're like, you know what, I'm just trying to save for the future, then that is a retirement account for sure. So that's going to do it for us today, guys. We are about to roll on out of here. Roman, any final thoughts?
No, guys, thank you for supporting. Please like, share, and subscribe to the channel. We hear from you guys. We like hearing from you all. Let us know what you guys want to talk about. Thank you.
Absolutely. Thank you guys so much. As always, you guys know what's up. We may be young and we may even be broke, but we are always investing. Thank you guys so much. Till next time. Peace.
Hey everybody, thank you for listening to Young Broken Investing. We just want to let you know that these are the opinions of the hosts. They're not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody and have fun and be safe.